know, the other one that we have sort of removed from the FANG complex because we just don't consider it in the same way that we do some of those mega cap techs, Netflix. So, Shan, what do you make of this, right? The stock's down. You got concerns about subs. You got real concerns about competition now. MoffettNathanson, they reiterate they're neutral. 465 is the price target. That's 8% lower from here. Michael Nathanson on the network earlier today says, it seems to me that competition is a problem. I ask you, are the best days of Netflix now behind it?
I actually don't think so. And I can see why people would be concerned about, the potential for competition. And clearly, Netflix has shown that this is an area that you can make a lot of money and people are interested in subscribing, right? So, success breeds competition. That's what happens. I think what's important to think about is that I read an article in the Financial Times this morning that stated that Netflix needs to go out and buy a studio, and that's going to fix all their problems. No. I actually think what's brought viewers to Netflix has been that they have done something different. They've created content that's differentiated from what you see in mass market studio releases. And so I think that Netflix is going to see an increase in subs in the second half of the year as they have new content that comes out. I think this, move into gaming as a supplement and to make their subscribers stickier, I think is a great maneuver. And I'm actually really excited over the next couple of years because I do think that some of the competition, it's not just going to be everybody versus Netflix. All of these different streaming providers are going to be fighting one another, and just looking at sort of their current subscriber base and the ability to grow that internationally. I think, this is a different kind of stock, though, Scott. This is a stock that's going to start to generate real free cash flow. This is a stock that is more mature than it was, say, 5 years ago. So perhaps it leads to a different investor, but I'm very excited about the business, and I'm excited about the execution that they can, proceed with over the course of the next couple of years, because streaming as a total addressable market is going to continue to grow.
I mean, I almost wonder if you're inadvertently painting a dimmer picture, Shan, by suggesting it's not, Netflix versus everybody. What if it's everybody versus everybody? And just a more competitive landscape takes away a bigger pie of potential subscribers for Netflix. That everybody's just cutthroat competing with everybody, and everybody's going to get their own little slice, but it means Netflix is not going to get what it thought it once would because everybody else is coming in to the business to compete against it.
But you're assuming that the pie stays the same size. And I think what you're seeing... But when you see it internationally, when you see the growth that's available, when you see the changeover in the fact that content, we still haven't seen a meaningful amount of people cut the cord here in the United States. That isn't a trend that has been, it's been talked about a lot, but there's still a lot of people subscribing to cable. You and I both know that. And so I think that there is certainly areas for this business to continue to grow and expand, to pick up more potential subscribers as they pursue gaming. So I think this is a great time to enter into Netflix. JP Morgan put out a great note on Netflix this morning, raising their price target. I'm excited about the stock and excited about content in general because I think the pie continues to get bigger.
Hey, it's not like, Doc, that Netflix's pain, if you will, is Disney's gain. Disney's not doing anything today, because it may have some of the same issues that Netflix does. It's not a zero-sum game. It's not binary, one versus the other. It's everybody against everybody else. And if Netflix is having potential growth in sub problems, then maybe Disney is going to as well.